Hello, everybody. How you doing today on this glorious Wednesday? All right, I'll take it. Silence means everybody is just great. Everybody's loving life, just short and loving it. Probably not.
Not short and loving it.
Yeah, it sucks, doesn't it? Well, it happens sometimes. I mean, I think you guys have seen, at least those of you who've been in the service for a while have seen, me carry some shorts and have a bad time with it. But it's I would say probably like a temporary sort of thing. I'm getting a little bit concerned about all the bulls just marching on parade here, but it kind of seems to be like a late cycle, like a late bull cycle sort of phenomenon here from the psychology perspective. Yeah, so I guess I'll just kind of roll through some of the charts here and just talk through kind of what's going on and what I see is going on here. I want to leave some time for questions, but yeah, is there any burning topics that you guys wanted to cover for sure? Ben, I can tell you got a topic. It's just you got it all over your face.
No, I actually don't.
I didn't mean to put you on the spot.
I mean, I guess it's a good fortune to have been mostly in cash. I was regretting it for the past few weeks, just like watching everything rally. And usually I'm the opposite of disciplined, and I was kind of astonished I didn't just ape into something at some point. But yeah, I know. It's kind of been interesting, like psychologically, like the idea of like watching gains you're not getting versus actually accumulating losses. Like I don't know which one is worse sometimes.
Yeah, I mean, to be honest, if you can't laugh about it, you'll cry, right? So
that's very true.
Yeah. So to be honest, like, try to take a step back from all the shenanigans here, guys, and try to realize, like the bigger picture. And I know like Alex, stresses that as well, where, you really just want to take a step back and kind of take it, yes, day by day, but also like look at the weeklies, look at the trends, things like that. Like kind of what, I'm doing is a little bit more short term than like what Alex does. So Alex has been generally bullish, right? And I'm trying to, trying to short, waves and things like that. But that's also part of the service. Really, it's more of like, finding trade setup opportunities, and then if it sucked badly, then explaining why it sucked badly, and what are you supposed to do to fix it? And that's really, what I like to do is, part of the teaching is to really show you guys that even if you know what you're doing, you can still make bad trades, and then you can make really bad trades. And I've seen it happen to a lot of different people. I've seen a lot of different analysts, seasoned, where for example, like let's say you long the top, that kind of thing. To me, that's worse. But I still hate being stuck at the bottom, holding shorts again. But then again, I say it all the time. You can only make the best decision you can with the information you have at the time. So I would say try not to beat yourself up for it. It depends on like where your positioning is, but you really shouldn't have to, fret about it, just because there's so many things that can happen. And let's say in a week's time, like I've seen markets just totally pivot, and it could be way different than, let's say, 2 days from now. I think we saw something a couple of weeks ago where like for example, I remember this day pretty well, where we had been grinding up for a significant period of time, all the way up here. We got about almost 9% here, and it took about a month, and then all of that was pretty much erased in about 2-3 days. So that's kind of where I'm thinking that we're sort of getting close to right here. I mean, probably not this like massive spike here. We had been treading water at the top for quite some time, but in hindsight, if this does turn out to be a bear market rally, and not something like, and I'm sorry, I know I'm jumping around. This actually kind of reminds me of this situation that we saw back a while ago, where it was a difficult situation because there was this big sell-off. This was due to the Japanese yen carry trade, and just from like some historical perspective for you guys, like all the all the analysts and talking heads and things like that, we all kind of thought here that this is going to be like a, sorry, not an ABC yet. What we were thinking was something sort of like this, which is kind of what, well, I mean, obviously it didn't happen, but that's really where you get into trouble here when you try to guess these different waves. So at any juncture, at any point here, what we were trying to do was really just try to pick and see like what is the most logical or reasonable sort of path. And that's what we're really trying to do here. And, back a couple months ago when this was developing, everybody was kind of dragging up their B waves on the chart, kind of saying like, okay, it's going to pivot here, no, it's going to pivot here. And then you kind of keep moving it, right? Well, that's the thing that sucks about being an analyst is that, when you're wrong, you're really wrong. So obviously, in hindsight, this ended up being, like a 5 wave, and this is a wave 2 in the bottom. But what we can, typically what you want to look for is where these major bounce points are. So in the past here, we almost got to the 0.618, and that is a typical wave 2 bounce point. And it happens on the flip side as well. So if we go forward to what we're looking at today, we want to look for like where these major flip points are. So that's why I was kind of saying like, all right, at this 0.618 level, this is a really good level to flip short. Well, it didn't work like that. And the bulls, they did this little gap up thing here, which was I don't have the moving averages and things on this chart. I will. This is just more of the demo sort of thing. I'll show you guys here in a second. But if you pull up something like, oh boy, it's a lot of junk on this one. Let me clean it up. So if you look at kind of where things are going here, you want to take multiple different versions of charts. And sorry, is that big enough for you guys? I could do one at a time here. So what we want to do is we want to kind of try to identify the most likely pivot points. And like I was saying before here, layering in the 200-day moving average here, or something with the 50. We still have this death cross here. We would have to have probably another 2 or 3 weeks at these levels or even higher in order for that to, I guess, flip bullish again. I mean, not going to lie, yes, the markets look like they are healing from the situation that happened earlier in April. But this is not exactly a healthy retrace either. We have these big gaps here, which will be filled eventually. But when, that's the question. So these big gaps, this is essentially what the bulls needed to do in order to get above resistance. So there's still some very, I guess, very bearish, views out there, or any sort of, analysis that, there just seems to be like a long list of things that are bearish. However, here we are still seeing, things marching up the space. But there are a couple different things that we know for sure that are bearish, signals no matter what. One is the declining volume and the price. So that's a divergence, and that typically, that pretty much always works as a signal to just gauge something. So even if there isn't like a big pullback or something, there could still let's say this is now becoming like a 5 wave up. Well, we should still see something like this, and then we would have to see that continuation, or you're at like a good bounce point. Now, typically when you see the 200-day moving average, like you see a lot of clustering around it. I mean, look at what happened last time it got tested. It happened like right at the limit, and then you started to see that here before. So this is where I closed my longs, and or at least half of them, and then it jumped up, and then I ended up closing it up here a little bit more. But that's kind of where I think a lot of the people that were trying to be smart about it were trying to get out of their longs and then flip short. So I think probably what we're seeing here is just more running up of price, and the bulls trying to fake people out, or maybe it's even the bears letting the bulls buy it up some more so they could sell higher. There could be a number of reasons for it, but if we are going to see some sort of continuation of this, I think this ABC corrective pattern, which will always come after either a ABC corrective pattern or a or like a 5-wave down. So I don't think we really saw that. I think we did see this ABC. So we could be looking at like a wave 4 flat, and I think that's what maybe I think Fred Frog had been saying. But if it is a flat, then we should see some sort of reversal here pretty soon. Now there is a possibility here that it could extend higher, of course. The bull target 2 here at this like 21,500. I think if you guys remember last week, we were talking about the potential of that because there was this flag that had been developing right around here, right around that 200. So it was looking bullish, and it was still a correct call, but at the same time, heading up to this 0.786 was, I think, the first stop, I guess you could say. The second stop is up here right around this 21,500. So you can also see here that there's a lot of like sell delta. So I feel like, even though the volume is declining, they're kind of walking into a sell zone. So I would say anything above this 0.786 is a realistic sort of sell zone. And you don't have to take profit on everything, right? So like if you want to play it smart and you don't want to give up any profits, well, what you could do is, and I think I've been saying this for a couple days now, where you could take your, here, I'll just pull up this other cleaner one. Like for example, let's say you hedged long right around here, which would have been, a smart thing to do considering how we also had, some more resistance here. Well, what you can do is you can continue to move up your stop. And a lot of the questions I get from people is, where do you move the stop to? Well, so again, this is just a scenario if you are long and planning on staying long, which is fine. I mean, you've been winning so far, right? And I do want to cover a little bit more of the bullish case here versus bearish. I think longer term bearish, but short term, we still need to figure out where this is going to top and where it's going to flip around. Because this could be, like I said, a number of things. It could be, it could still be bullish if we see this sort of like, 5-wave thing to make a new high. But if we do end up making a new high, watch out, because that is now the second, like 5th wave here. So if we did see, if I just zoom out real quick. So let's say we do make a new high here, that is now a decent wave 4. And then we've also seen here what looks like a longer term wave 3. The longer term termination of a wave 3. So this entire section of price action here could be a wave 4, or it could just be again, it could just stop here ish, and then we have our another larger C leg down. So there's a number of possibilities, but I think that right now we don't really know what's going to happen. I do think that there's a lot of bear signals, like we had negative GDP growth last quarter. I've seen some articles that kind of wash it away, like, well, it was part of this, part of that, and sure, you can argue the same thing about CPI. CPI data can be manipulated year over year, but still, they kind of gauge sentiment really. So now that the bears are starting to get beat up here, like in chat rooms and stuff, that's my contrarian signal to start looking at or start looking for a top, because at this point it's kind of sucked in all the bulls and all the buyers, and most analysts are going to point to these targets here. So for example, this 21,165 that we already hit and exceeded, and then this this 21,588. But on the other chart I had like 21,500. It's a little squishy just because of there's different Fibonacci levels that we can draw. But back to the back to the general theme here is that if you are long, there is some upside potential here, but I don't see much more upside potential without some sort of pullback first, if that makes sense. That's really like the core argument here. So again, it kind of depends on the pattern. So typically you can see a C leg extend up to 1.382 for like a flat. If it's an irregular, then you could see something crazy like this, where in hindsight it could be an ABC, but this looks a little too extended for the kind of dip that we got here at the bottom. You really want to see more consolidation rather than just a big spike like this, in order for that to sustain a larger rally. So like you need to see accumulation, and we didn't really see that down here. If you can you can kind of see that that's still not in 70% worth of the volume in the range here. So if you're a bull, you want to accumulate at these levels for a couple days, really, just to keep buying and buying before you start, pumping up the market. So that's kind of why I think it's it was a very quick pivot, and that's why it might not last much longer, because there hasn't really been that kind of accumulation. You want to see something like this to drive the next leg down or up. Really, you want to see this, multi-day. I mean, this went from the 10th of March all the way up to the 26th. So that's a decent amount of time, to either adjust your positions or go short or distribute longs, that kind of thing. And we really didn't see that. We saw it in like a day. So that was a quick pivot, and things have been kind of weird lately with price action in the market. But all right, so sorry, I don't want to keep droning on about that. But the long story short here is this ABC pattern here, I think, is wrapping up. It's at least getting a little close here to some major levels, and you can see like even if I pull up like the hourly charts here, you can see a lot of these blue bars, which is just indicates the bears are just taking the foot off the gas and letting them buy it up to the next major level. So that's kind of why that like a good strategy is to just let them or is just if you're long, stay long, but maybe trim some up. Let's go to the other example here. So if we do expect this to head up to like 21,500, what you want to do is you want to pick the different levels here that you're comfortable with, of course. And again, like if you're super long, congratulations, you probably made a boatload of money. But it's kind of typical for like a bear market rally where it just goes all at once for about 2 or 3 weeks, and then kind of peters out a little bit, and then you see a resumption of the selling, and people think maybe it's a wave 4, like I showed you guys a couple minutes ago, or it's or that really was a wave 2 top. I think probably what we'll see here, if it is going to end up flipping bearish here soon, is that we'll probably see some sort of consolidation range for a couple days, and that's the same concept as accumulating for the bulls. Well, there also needs to be distribution. So by zooming out here, you can see that anytime you have this big this big distribution zone here with all the sell delta, that's where I keep my eye on it. So anything above like what we've anything really above this range, that's where it starts to get a little scary to be very, very net long. And like Ben said, like just sitting in cash, like it could be painful in hindsight because you missed out on a lot, but there's always tomorrow, right? And if we end up seeing a major turn, well, then you could just jump in, and that's actually so much better of a position to be in. You'll have so much more like market range to capture profits from. So to kind of go back to this stop example, you have to pick levels which you're okay with, and understanding kind of how the waves operate here. If this ends up, this kind of looks like the beginning of a wave 4 here. So we could see something like this where there's a small pullback, to give the bears a little bit of something to eat here. And this also kind of looks like a smaller like a wave 3. So sorry, these counts are a little weird. 1 second. So just to try to give you guys a little bullish scenario here, I think that we should have some sort of wave 4 pullback here, and it might be quick because I think longer term here, this is still an ABC, and we had all these quick buy-ups, or these it's called pin bar chart patterns, where it just gets pinched up and gap and go, whatever you want to call it. So if you have your longs and you really don't want to manage your positions, what's really nice about having longs and kind of like accumulating as it goes up is you've got some longs that are in profit from, for example, like from down here. That's great, and then they're probably deep in the green. But now if you haven't either closed some of them by now, you're probably thinking of closing some of them by now. And that's not bad either. The only thing that is not cool about it is when you have to chase and you have to add the longs again because you took profit too soon. So a good thing you can do is like take profit on, like, let's say if you have 10 units of something and that makes you uncomfortable, take half off the table, take that, take the money and put half in the bank, leave the other half in your trading account, that kind of thing. And then you could take the other half that you had that's long. You could do two things. You could let's say, for example, use this level here to hedge that short because you think it's going to make a new high. You could do that. You could do like a 50% hedge, something like that. Or you could continue to move this up, where you could set it. Typically, a good spot for stops to take profit are below the last wave count high. So you can kind of see, like right here, we've got this spike here. So in theory, if this is going to keep going and extending, then you shouldn't see price violate this level. So let's say it's a larger wave 4. If it's going to make a head and shoulders or something, it probably wouldn't dip below this because the wave rules are typically wave 1 wave 2 can't wave 4 can't exceed wave 2 or vice versa. And it's just a kind of a good rule of thumb. But if that makes you a little uncomfortable, like it's a little too close, you could still keep it just below the last low. So that way, if you do see a deeper wave 4 like this, it might get tested and you might get like a stop hunt or something like that. But if you keep it a little bit out of range, then it's probably fine. But if you do expect there to be a big wave 4, which I kind of think we might see, then for my longs, I'd probably keep the stop right around here, just because you get a lot more profit from that. And if it does dip below this, you can always reset it. And if we do see a wave 4 here, you'll still get, like if you're holding shorts or all in cash, you'll still get this zone here, which is, it's not nothing, right? You got a nice, 1.15 gap there that you can monetize and, reset for, like, let's say, the last run up. So hopefully that makes sense. I want to stop there. Is this making sense, or is this like just Gage droning on here?
Yeah, makes sense.
I see a nod.
It makes
Good.
sense. Yeah.
Okay. But yeah, I mean, really, guys, at this point, if you're short, there's really not too much you can do other than just protect against your protect against further upside. And it's a sucky place to be, but it happens to everybody. It's just like how you remember back in April, it was painful because, we have big drawdowns and longs. A lot of people bought in right around here and then got clobbered, right? So now it's the opposite. When the shoe's on the other foot, this is kind of like the revenge trade for the bulls. And now the bulls are exiting all their longs that have been trapped. And just a word of caution, you can see a very quick turnaround with a wave 2. So if this ends up being a wave 2 in hindsight, that's why you'll want to keep moving up a stop here in trying to protect those profits where possible. Because you could always see a pretty violent and quick sort of pullback. Like a 2% pullback will trigger pretty much any stops that you have, or should at least. So if it pulls back 2% here, most likely when you do see some sort of top, usually the first day is like you'll get a wick down of maybe like 3% or something, like maybe a future sell-off, 2%, and then you get a bottom wick here, and then you get some sort of half a retracement. So it looks like there's a 3% range for the day, but it's really only like half, that kind of thing. But anyways, like if you do get this, if you do get a big red day, something where you just kind of knifes through a lot of different support, like, I mean, obviously you're going to see it, so set some alerts and be aware. But yeah, so I guess the simplest way to do it is just to keep moving up your stop like that. And right now, the price action, again, like the volume's kind of dipping down here. Price action is getting a little weird. Like today, you can kind of, let me show you guys. Like today, you can just see, like big sells up at the top. You can see these little short stabs down here just to try to test buy support. And that means that bears are at least loading up on some shorts and trying to prepare for a market turn. And you could also see that the VIX had increased today as well. If I can find it. And that's kind of a signal that, well, the VIX is increasing while the market's still going up. That means that bigger players are adding some downside protection, or something's going on. Maybe they're, just general volatility is increasing with maybe some sectors and things like that. The sector's not looking good today on a day where pretty much everything was, or not pretty much everything, but like, Nasdaq was up. I think the Nasdaq was really just propping the market up today. I mean, you saw, stocks like Tesla, had a big jump today, but I think that was also part of I don't have it on this chart, but sorry. I had it on the other one. Well, sorry, I don't want to waste time on it, but anyways, you saw a big jump with Tesla, and that was almost just to hit like a target sort of thing. If I adjust this real quick, you can see that it's almost right at this 50% level, and that's a really good spot for a B wave top. And you can also see here that if you measure it, it's like a equals C, or pretty close to it. If you go head back down, there we go. So from entire peak to trough here, where it stopped, I mean those are alignment of fib levels, which is a good indicator that that's going to be a good resistance point. So if you're short Tesla, try not to sweat too bad. I did add some shorts just because I think it's again, look at these earnings. It sucks. So but that still hasn't stopped things in the past, right? All right. So I digress. So it just the charts all kind of look the same at this point for equities. We've already kind of talked about the strategy of, if you're long, just kind of keep moving those stops up, and it's probably not a good idea to add shorts yet, unless you still think it's going to go up to space, and then maybe adding in a little bit of short positioning for some downside protection is a good thing. But that's if you have like a very, very long-term sort of approach. In my opinion, just my opinion, likely not shared with like all the Cestrin folks, is that I just don't get the warm and fuzzy feeling about this rally, where other rallies they had better engagement, better like media support, right? Like better, it just felt better, right? And there's sometimes, like, again, like markets have a feel to them, and like the Nasdaq trades a little differently than like the S&P, and I just get the sense that a lot of these mega cap stocks are being driven up to prop up the market and boost the indexes up, so bigger players can exit longs that have gotten trapped up here as they're buying into that weakness, and that's typical of wave twos, or I guess the first bear market rally, whatever you want to call it. Like if we had a bear market rally that missed it by 0.5%, like don't get tied up in those weeds. Technical analysis I find is very, very helpful for that, where you can get lost in the news cycles of a lot of people posting different charts, like, oh well, guess what happens next after this happened in the S&P. Well, nobody actually knows. If they knew, they'd be millionaires by now, right? So all right, so basically the one other thing I wanted to say here was the Dow. This one looks interesting to me, because this is it's starting to kind of sell here. Like you're starting to see a lot of sell volume, where in the Dow typically will lead others. So I guess to summarize with this, kind of watch what the Dow's doing. The Dow's bouncing off of its 200, and even if it does press a little higher, if it exceeds bull target 2, then I'd say it's then bullish, and likely the Nasdaq will be far beyond that. But the Dow, in my opinion, that's where you see some defensive blue chip stocks and things like that. So if people are taking money off the table there, then likely they're adding to the cash pile. Small caps, I don't know. Anybody trade small caps? Kidding. But if it hits bull target 1, which is likely, higher rates are good for like a lot of these regional banks that comprise the small caps. But yeah, I guess suffice to say that everything kind of looks like the same, where it's all making these little waves, and also like for the S&P, sorry, I don't mean to jump around all much here, but it kind of made a double top. And in my opinion, you're starting. Sorry, that's my dog. 1 second. Sorry about that. She can be real noisy. But so what we're, I guess with the S&P, it's hitting this this longer term A equals C target, and that's where I really try to flag that for everybody and say, hey, we got like a confluence here of fib levels, at least within a couple points. And on top of that, if you guys have seen what Robert Ballin has posted recently about dealer gamma flip points and things like that, that's also really important. So this 5906 level, in my opinion, it either stops and reverses here, or if it continues up, then the dealers are going to have to hedge, which is going to drive up prices. So the bulls all know that, we can all buy subscriptions to the same data services, right? So, so if you have deep pockets in your bull, that's what you're going to try to do, is you're going to try to get it over that gamma flip point for the dealers. But the dealers, in my opinion, will resist that, just because dealers also see weakness with the macro, economic views. And they don't want to be stuck holding 89 million long futures contracts as a hedge when, let's say Trump says something tomorrow that drops the market 10%. Then as a dealer, you have a lot of systemic risk there that enters the market that I feel like they're going to protect against. And that's stuff that you don't typically see like on the news. But that is really how these things work behind the scenes, is that there has to be somebody that takes the opposing side of the trade. So if everybody's super bullish, nobody's going to want to, the dealers are going to have to continue to be short. But that's also why you see these whipsaw price actions, just because the dealers need to eventually exit their hedges for their positions. So, in my opinion, it's you can see like these V-shaped rallies, but that's likely due to a lot of gamma on the books. So after this Friday or the 16th, when a lot of that gamma rolls off, then we'll start to see what it looks like for next week. But there's a liquidity drought here in the next, I'd say like the last 2 weeks of May and the first early week of June. So that's also why I chose the strike the strike expiration dates as of like middle of June, just because for like the quantum stocks and the covered calls, just because there's if we are going to see this liquidity drought, we'll see if it happens, just because seasonality has been kind of not helpful lately. It was supposed to happen in September and October, right? Nope, it didn't happen. So we haven't seen sell and May go away yet, but this week should be the last week, and then we should see some tops tagged and things like that, which I think we are already seeing. It's just we need another day or two to see it materialize, and likely we'll see some accumulation here. So I'll just touch really quick, because I know we're about at time here. So real quick on the yield. The yield keeps screaming up. That's the sleeper right now. In my opinion, here we have a inverted head and shoulders, which is a very bullish sort of thing. And we also probably would have seen a reversal at this 0.786 level. So at this 4.492 level. But we didn't. And even though, I'm looking here at like the RSI, that's the red line down here, the RSI is elevated. The RSI is the white little line. And then the red one is money flow. So, it's definitely got some wind behind the sails, that's for sure. But the positive covariance now, which you can see down here, which is, I'd say it's it's not very strong, but it's strong. That positive correlation here with equities. But again, at tops, it does tend to flip. So it's not a very reliable indicator. It's just something to watch out for. But longer term, higher yields are just bad for equities. And I think equities have been kind of really lucky over the last couple of months, just with grinding away and getting higher and higher with this economic backdrop being more questionable long term. So gold is finally. Go ahead. Yeah.
If I look at TMF, there the previous dip, there was a lot of volume buying and the TMF shot up, and then that's kind of what's happening now again. So that's why I was wondering if this is just testing the bottom and then ready to go up, which means yield goes down.
Are you talking about
Yeah,
out here?
you see yeah, it seems like it's more volume now, but I don't have the red and blue lines. I only have lines. So to me,
Oh yeah, it's okay. Well, no, I mean, I mean, if you guys remember what I was talking about, it was a while back, FNGD, where it had the same sort of look. Yeah, here we go. So, I mean, you can kind of see how there was accumulation here that you see.
Mhm.
And, you know, and you're also, let's say you know, like we have what now looks like, I mean, a lot of buying, but that just because the color of the bar is blue doesn't necessarily mean that it's all buying. The one thing I wish that they would add for this, for trading view at least, is like a delta sort of thing here that we have like in the volume profile. I'm sure they'll probably add something someday, or maybe I can, you know, maybe Ben can help me code something. But he's a wizard, by the way, wizard behind those keys. But it's okay. Sorry to get back to the main point here. You're correct. Once there's volume, that's what you want to look for, because that typically indicates pivot points. It's the same thing with let's say, let me just pull up like TMV. So TMV, you don't really see a whole lot. You know, I mean, you see some profit taking up here, but it doesn't really look like there's a lot of buying. But it's probably just because sorry, one second, let me pull up TMF again. It's probably because people aren't really sure what's going to happen with the yield. And we also just had the Fed just announced that they're holding rates flat. So most people think that, you know, or most people at least thought that, you know, they're going to cut rates by, let's say, a quarter point or something like that. I didn't really see any consensus with that. I just kind of saw people are all over the place, but maybe that's a reason for it. And now that you see the yield getting above like these key fib levels, like the 786 here, anything above like this 5%, it's going to start to be risky for equities, and also very bad for the bond market. So if I pull up, I mean, we have seen a pretty decent sell-off, and that's really where the action is. If you look at something like TLT, okay, and now obviously like the 10-year yield and, you know, 20-year, yes, there is some delta there between, you know, like the action and reaction. I'm aware of that. It's just that, you know, that there's really no like good 10-year bond fund, and TLT, you know, it's very popular, so it's pretty closely, you know, related. I just wanted to point that out because I've been asked a couple of questions about that. But you know, and I'm sorry, this is kind of my clean version here. But if you look in the main channel, I do have a TLT chart I posted earlier today. But I guess to summarize here, you know, with the rates headed up like this, there is a strong possibility that, you know, typically, if you see the rising rates, you could have this big big rip down, especially if we start to see some other things that happen, because the Fed, their hands are tied. They can't do much. They're kind of stuck right now with tariffs. And okay, like, and I do want to address the tariff thing, because, you know, even if you leave it at 10% for China, that's still a 10% price increase you've just passed along to the consumers. 10%, that's a lot. You know, it's like going to the gas pump and seeing gas is 40 cents a gallon extra than it was yesterday. And that's going to show up on top of supply chain concerns as well, which is also going to squeeze prices. So, you know, really, retailers need to make up those tax gaps. And they typically do that not just by passing along to the consumer, but also raising prices on the existing inventory to pay down whatever their, you know, trade surplus was, or the bill they got from DHL. Or, you know, saw an article the other day, somebody got a $35,000 shipping bill from from the port of Los Angeles or whatever. That's gotta suck. But anyways, like, I think we kind of just saw this this like B wave top here for bonds, and like people are starting to wake up that like, hey, yes, the U.S. is making changes with their monetary policy, but because the Fed's keeping rates so high, well, who wants to buy a depreciating asset? It's like buying a $90,000 truck when you can buy a 1-year-old truck that's $70,000. Like it still works, but it's got 10,000 miles on it. Oh well, but it's significantly cheaper. So instead of buying these short-term bonds in order to fund the debt, what Trump and the Treasury are trying to do is they're trying to refinance the debt. So they want lower interest rates, but unfortunately, it's a double-edged sword. So they're imposing tariffs, but that's inflationary. So rates are going to go up. So they're kind of, Fed's stuck in the middle, and they're not going to get what they want at the same time. So you'll probably see this sort of, back and forth where, the administration blames the Fed for moving too slow, for not keeping rates low, that kind of thing, but they don't really have a choice. And I think it's important because it's, the bond market's 10x of equities, and it's just a very sensitive issue at the moment. Even though, yeah, it's really easy to draw the stuff on the charts. Whether it actually materializes or not is another thing. So I don't want to. I hate being like a doomsday guy, but it's really, things are weird right now with the markets, guys. Like they really are. I haven't really seen a lot of this sort of crazy in at least the last 10 years, that's for sure. So anyways, okay, so that's the yield and bonds and stuff like that. Gold, I think, is a good long. I'll probably do like a 1 unit sort of long here if we get down to this 3147. Gold is metals and gold are still and commodities just in general. Like if we are going to have inflation or even stagflation, I'm not sure if Don's on the call here. I don't know if I see him, but we chit chat about like silver and like soybeans and wheat and corn and stuff like that. And there's some good opportunities there if you are able to trade like, let's say, futures or some sort of ETF or something. But I think that this is like metals, as you can see, are becoming like an inflation hedge because nobody wants U.S. bonds because they don't yield enough money for the risk that you're taking, especially with the debt to GDP ratio and tariffs and stuff like that going on. So that's one of the drivers of these things. I think not only could we see like a flag here, and this might launch pretty high up, but the question really is, where's it gonna land here? So I'm kind of thinking, if not, I'm actually kind of thinking that it'll probably bounce up and do one of these like flag sort of patterns, and we might get even another lower low, but that's good because we can still trade it. I love trading flags because they're very predictable. So if you're a gold bug or a metals bug, that kind of thing, you want to look for patterns like this, especially the first ABC, because that's where, well, one, you don't really know where it's going to stop. Like if it stops at this, if it stops at this 3147 level, that's good because then likely it's going to be a flag, and you'll get a lot more participation here. It's going to bounce, and everybody's happy. And then you just kind of see what happens once it gets back to the sell zone up here. So that's also why seeing delta here is really good and informative. It's just because now that around the 3321 to 3345 level, that's like a good sell zone. And I'll mark it here like on the chart. Hopefully that's helpful. So that's that. Oil, a little bit weird. I kind of feel like it might go down a little bit more. I think like I have an order to even up my hedge for the short side. So right now it's 302 net long. There's also relatively decent drawdown for the longs that we took back up here. Sorry, not I took up there. Yeah, I was wrong. But also too, you get this big drop, and I think this also surprised a lot of commodity traders, just because you have like this relatively long-term support here at this bull target 1, and you're having a little bit of a low, and then not really coming back up for air. That's what I think has been so damaging to that. But in the event we do see some sort of like, let's say for example, this is a wave 4, and we see some sort of bounce like this at like 53.20. Well, one thing, gas will be cheaper, so that'll be nice. But I think I'm going to hold on to the shorts and just keep like a 1-to-1 spread with the oil longs, because in the event that we do see something like this, where let's say it bounces off of the 50, then we have some sort of economic calamity on Monday or whatever, it'll at least be protected, and then we can focus on what to do with equities. But at least the oil trade, I think, is going to kind of bottom out a little bit more. It might take a couple months. So that's my fear with that. I mean, I don't think that oil is going to be totally clobbered. I think that, oil is like, you can't refine it for free, so they're going to, either supply is going to be cut back from Middle East, or we're going to have, some other, correction or corrective action in the market from, let's say, Saudi Arabia or something like that. We're also reaching like, peak shale boom, that kind of thing, or at least I think we have. So I guess, to kind of truncate thoughts here, energy, I still think is bullish, but we'll have to see what happens here. It's in a perfect world, we would see an extension up here, and maybe even like a 5-wave, or like an extended 5-wave up here to maybe test this 200 this 200 moving average, which would be nice. That might be enough to get out of those longs. But in the end, it really just kind of comes down to whether we have this sort of the really small ending diagonal play out, and then if we have I guess the triangle kind of resolve itself, and if it bounces here, it doesn't really matter. It's still that would still be pretty profitable. You probably make about like 10 grand on that short trade if you had it for units, or 30 grand on that, or however you slice and dice your units. So gas. Let's talk about gas real quick. I thought that gas might do one of these guys where it's like an ending diagonal here, and it kind of truncates here at bull target 1. But that's not what we saw today. We saw a little bit more selling, but I'm not really too worried about it yet, just because we see this declining volume, and gas likes to do this a lot, where gas has more convergence of price and volume. How do I say it? Price and volume trending in the same direction is typically means that like volume is drying up. So like a great example is this last leg down. I mean, if you guys remember, I kept pounding the table on this, like, volume is drying up, it's getting lower and lower and lower, and then look what happened. That kicks off the next bull cycle. So we're kind of seeing it's not quite that pronounced right now. Like, you still see a little bit more selling. So it's possible we might test this, this 200 EMA, but we bought Boyle way down here, so we're still pretty deep in the green. I'm kind of thinking that rather than add cold hedges, I'll probably maybe just set like a take profit order. I think that even if it goes down a little bit lower, like let's say like this, and then does a trend line retest, and then maybe makes a ABC and then flips back up, right here is where I would want to take those long profits in Boyle, and then just hands off and let it kind of do its thing and show its hand. Does that make sense? And by the way, I know it's going way along here, so if you guys want to drop off, whatever, it's totally fine. But I still wanted to, it's kind of a weird time in the market, so I wanted to make sure that I'm accessible for you guys. All right, so SOX, let's talk about this real quick. SOX is kind of getting up to that 1.382 level, just like a lot of other either stocks or some of the other different some of the different indexes and things like that. So there's also, I mean, you guys can see up here this very, very dark, or a very, very bright red. Oops, sorry, very bright red sort of point of control. For the bold trader, taking some SOXX, SOX, you know what I mean? SOXS, yeah, that's it. So by taking some short positioning there, that actually might be a really good trade, or at least maybe like a put spread or something on SOX, just because like there's a ton of sell delta up here. And on top of that, I think it's also important to see, like, okay, so what comprises what makes up the SOX in general? Well, I mean, you got NVIDIA, and look at what's happening with this guy. This guy, like, it's trying to reclaim this. It's trying to reclaim this longer term trend line that was broken through, but it's also getting really, really, really close, to this like 139 level, which is this 786 retracement. It could retrace all the way up here, 140 for some sort of like head and shoulders. But just kind of thinking that NVIDIA is a driver of SOC for sure. Same thing with like AMD, all the other ones. But really, what we're looking for is we're just looking for some sort of top and reverse, that kind of thing. So SOX itself, just keep an eye on it. You are starting to see some higher volume, and SOX had been low volume for probably the last. I mean, even throughout April, it didn't really do much, and because I also kind of think it was a little too low, so or like it had been oversold, I guess you could say. So even though it kind of hit lower, it's still bounced up relatively fast, but you can't have a gap like this and just go on living and ignoring it. Like, this is something that will be filled eventually. So let's say even, if you're comfortable with the trade, even if it heads up here and this makes like a wave 3, you'll still see some sort of wave 4, wave 5, then likely you'll see a gap fill. So this is, I'd say, probably the most bullish scenario you can see. And this would require NVIDIA going above that 0.786. And I don't think that there's enough justification for forward earnings to but hey, when do fundamentals matter in a market like this? So all right, Bitcoin, this guy looks really interesting to me. This is what you call a diamond top. You can draw the lines here, at least what it looks like today. I'd say this one's got about like a 60% success ratio. With pattern to expectation, where typically, like with a diamond top, you can see almost the exact same sort of, action, right? On the left side, reaction. That's typically what you'll see with like a diamond top, because if you look really close, it kind of looks like a 5-wave, right? So that's just something to be aware of. Now, of course, Bitcoin, it's going to have to test this breakout area anyways. And if I just extend this here, what do you know? Hand drawn kind of looks close, right? So you'll see at least a retrace at some point to test this breakout zone. I don't think that it's got enough gas in the tank here to get above this bull target 1, unless the sellers step back. So that'll also be very good for MicroStrategy. So those shorts, apologize for going a little short too early on that guy, but hey, who knew what was going to happen? All right, so let me just pull up MSTR real quick. let me just take off all the charts. Just kind of look at that. That looks like a textbook ABC to me. I don't know about you guys, but this origin point down here, so A, B, and C, and it just looks very robotic, almost like it's sorry, I was going through this the other day, and so you could see this ABC up, and Eric, I think I saw you on the call, might have dropped, but you can kind of see that. Oops, this is like right here, button up against the 618. So I guess again, you would typically you see an ABC or like a B wave bounce at this. You see it at bounce at like the 50%. But if you see anything above that, then you could also see like a 3-wave down sort of thing. Sorry, 5-wave down, like a much larger sort of corrective move. Now, I don't think that this is going to happen. I mean, the earnings, yeah, they suck. So it should, like, come on, guys, right? But at the same time, that doesn't mean that it can't go down or it can't go up a little further, right? So that's one thing that I'm just keep trying to drill into you guys, is that there's weakness, bad earnings. There's just like a whole bunch of stuff that's pointing towards selling, but I still don't see a lot of volume up here yet, like a big bright red bar kind of thing, like you saw with SOX, right? So that's kind of where I'm getting at with this. And I just wanted to show that when Bitcoin does make its pivot, and when it makes its retest, highly likely we'll see a wave like that. And to kind of test the top of this first big pivot down, and then likely a retrace like normal. And then we'll probably see either a C leg and, maybe another bounce, or we could see a lower low and then a bounce up like this. Now that I've got 6 units whole hog rocking and rolling here, I want my revenge. So I'll be holding probably a little bit longer than what's reasonable. But it'll be, but I do think, again, this pivot is coming sooner versus later. But we're not out of the woods yet. I think there needs to be some more accumulation and, accumulation of shorts, distribution of shares and things like that, because, big players like to make big money as well. And, SMST has been a really, really good short for quite some time. So, even being negative on it right now, we're still, the TGPF fund is still up like 35,000 on SMST alone. So I'm not too mad about it, but I'm a little mad that, of course, everything just started to run away. But again, I can sleep at night just knowing that typically you do see pivots here. Now, if we do see more buying and Bitcoin just kind of keeps heading up, Jake had mentioned that there's, talk about reserve currency discussions, things like that. I haven't seen anything material with that yet, like with Bitcoin, but I think there'll be some sort of, there'll have to be some sort of adjustment, because generally risk off is like everything risk off, all boats rise and fall with the tide. So Bitcoin will fall if equities fall, and, the inversely related things like, let's say, commodities will go back up. And that's just kind of the, the natural order of things. So now that I've talked for almost an hour straight, any questions, comments, concerns? Happy to answer those. I'm sorry, there's just a lot of material to cover, but hopefully you find it valuable. Susan, yes, welcome back. Go ahead. If you're talking, I can't hear you. Still can't hear you if you're talking.
Can you hear me?
Yes, now we can hear you.
Okay, sorry about that.
Okay.
Naive question. Does natural gas, or are there factors other than seasonality that can be really impactful on the price of natural gas outside of things like, Russia invading Ukraine, where prices are going to really spike? But I guess the question is, have you ever seen it not follow a seasonality pattern?
Yes. Not very often, but sometimes if it's kind of like a lagging thing. It's a little hard to explain. Where let's say you have it kind of hinges on those inventory reports. So you see those happen like on Mondays, and then typically you'll see sometimes you see like, let's say gas is up, but oil is down. You're like, well, what? Why? Typically it's because if you have a big adjustment in futures, they smooth that out over about 5 days with those ETFs. And that's why you can see a little bit of fluctuation there, especially if you have like contract changes as well. So that aside, inventory adjustments typically move the price of gas. I'd say a little bit more than let's say crude inventories. But gas stocks in general, because they try to, stock it up over the summer in order for winter. But if we haven't had like a really brutal winter, then they sometimes the stocks can be a little high, or at least like ahead of schedule where they're at. So that'll depress prices for sure. But just something else to note as well, kind of while we're looking at this, I do think that this is like a head and shoulders in formation here. So this last little jaunt up here, I'd say end of May is kind of the last time where gas is going to be bullish until we get to maybe like fall. So hopefully that helps. I don't really have like hard data on it, but it's just something I've kind of observed with the charts over the years. Does that help at all? I hope so.
Yeah, I mean, it still sounds like there's a lot of seasonality to it, and even inventory levels are going to be based on seasonality. That helps. But like I said, other than like war, natural disasters, pipelines or whatever blowing up. Are there other factors that are as strong as seasonality, or is that really the one where you're just always looking for that, late spring and then the fall?
Yeah, I'd say seasonality and also supply. Supply to like forecast. Because you can see, where is it? There's some seasonal. Well, sorry, I don't want to waste time looking for it, but there are some charts you can find out there that have like gas stocks to forecast. I think you can find it, if you use TradingView, it's like in this calendar panel, and I think you just go to oh crap. You know what I mean? That's like, I think you got to go to one of these reports, I guess, that'll show, because sometimes like when you go here and you look at like the inflation chart, you can see like what the forecast is to actual, and if you're trending lower, then you can probably assume that the gas prices are going to go up just because the supply is down. But yeah, I'd say seasonality is probably the top out of all of them. And then like supply is secondary.
Okay.
Any other?
Thanks.
Hopefully
Yeah.
that makes any other questions about that, or?
No. Can I ask another question, or somebody else need to ask a question?
Sure, go ahead.
With your bear put spread on QQQ, just again, you're out about 3 weeks, I guess, because of what you explained before. You like to capture some of that, I guess, that what you call data decay. The 10-point range I kind of get, but my question is, what if, based on craziness in the market, if QQQ does drop below 510, you've got I think you realize full profit. But then if it turns around and skyrockets because all of a sudden all tariffs on China are released or whatever is crazy in the news, you basically wipe that away, right? So you've got 3 weeks with either you're going to gain 100% or you're going to lose 100%. Is that right?
Yes, except the 100% part. So so you are correct in general with like what could happen with that. So I'm trying to draw this box here. So today I think it was 520. Was it 520 or 530? 520.
520. Okay,
yeah. So 520, 510. So basically what we did here was you bought some puts at 520 and then we sold some puts at 510. So this, as long as the price doesn't stay within this gap, then we, as long as it stays below this gap, once it gets to expiration, then yes, we would make 100% on that, or all the profit that we could. It's really just 10 or however many contracts you have times the point value, and then that's really your max profit with that. But what's nice about the spreads is that if it does go above this, like an example, let's say all tariffs are absolved or whatever, and market goes to space, you're only in it for your max loss of whatever your debit spread was. So I want to say it was like $3,800, something like that.
right.
That's your max loss, as opposed to like, let's say, let's say you had stock or something and it just, plummeted, it's really tough to come back from that. But what's nice about the spreads is that you kind of cancel out that time decay. Even though it's not that it's non-existent, it's just that you have then hedged against your you've hedged against the unexpected. You could have just taken out a whole bunch of puts at like 520 and you just cross your fingers and hope that the market reverses. But hope is not really a good strategy, and we still want to cover our butts here when there's a lot of crazy stuff going on with the markets. So the spreads are nice just because it kind of covers you. And I do want to just because it's related, I wanted to bring up that Chris had talked about in discussion yesterday about how, or he had asked a question at least about there is like if you like you buy back your hedges, you could absolutely do that. So let's say, for example, market goes like this, and then all of a sudden, we have total destruction of, the economy, that kind of thing. You could buy your hedge back here at a much cheaper price than what you sold it at. And then if the price goes back down here, and let's say that this is, so let's say this is week 1, and then this is week 2. You'll be able to make a ton more money off that same position just by just by buying back that leg of puts that you sold when it hits a higher price. But it's really just more. But the risk you're taking, I guess, is really you're expecting it to hit, head lower than what your original level was. It's just it requires a lot of like maintenance for that position, and it's not necessarily a good, if you want to sleep at night, it's, I'd much rather, like for me personally, I'd much rather have the spread and then just, slow and steady wins the race, right? Like you just keep adding spreads at good spots. But some people are more apt to take more risk with that. So if you had deep pockets and you really wanted to, short a whole bunch, you could take a longer term time horizon. So a spread, I typically take like a 3 to 4 week horizon, just because you're going to make more money closer to the expiration date, especially as the let's say at the end of the second week where the data really picks up, your value of your sold option is going to decay pretty quickly, the farther out of the money that you get, and your option that you bought is going to appreciate way faster because of the higher delta being at the higher level. Does that make sense?
Yeah. So, but back to the spread that you set up, I'm pretty sure I'm trying to follow some of this. You're basically risking 3,800 for potential of 10,000 within a 3-week period, right? Yep. Okay.
Right.
So let's say on June 10th, the market shoots up. It's, KKK is at 530. I'm just pulling numbers. You're out, right?
Pretty much.
Unless you have decided on 5/9 to close that spread for partial gains.
Yep.
Is that
Exactly
right? But you won't achieve 100% gain prior to June 13th.
That's right.
Okay.
So,
and the closer to expiration, the more gain that you're likely to get. So if it's working great the first week, and then the market shoots up and KKK is over 520, and you happen to close after the first week, you're probably going to make a lot less money. Is that right?
that's correct.
Okay.
However, you can always reset. So it's a very good question. So in this example, let's say market goes down and you're up, let's say a couple grand. That's where then I would set some sort of like stop to take profit. Keep it somewhat out of the range because it's options prices are a little weird, but you can still set stops and limit orders and stuff like that. So if you do see something like this where it heads down and your position's in the money, but now all of a sudden it's starting to look really bullish, then you can just close it out. I mean, you'll still make a decent chunk of money, but if it does then head up like this, you can just reset the spread again. And, you'll be able to, even though you'll have a little bit more clarity on like where the market might top at or where there's could be potential pivots, because they don't typically happen, within like an hour, right? Like you'll have enough time to evaluate those positions. So I guess the long story short about it is, in this specific example where like it heads down, you're in the money, great. Maybe set some stop to take profit if it starts to head back up. And then if it does that after a week or something, you can always just buy a new spread. And what's nice about that is if you do reset it, even if VIX goes up and the options are more expensive, the option that you sold is also going to be more, it's going to net more premium. So you'll be able to, it should be relatively the same for cost for the spread. It's really just the point value, which determines, the point delta that determines your, like the majority of your cost. So even let's say it's 10 points higher, okay, it might be another couple $100 for the same spread, but that's sort of the same concept. Does that make sense?
Yeah. And I hope I'm not hogging time here, but very last question. Do you tend to avoid like the end of the quarter options when setting up spreads?
Good question. I do. I don't like, so OpEx I feel like is very overblown. There's a lot of risk and a lot of gamma. So the dealers don't typically like to let price, get too far up or too far down on days like that or days leading into that. And I feel like quarter close is sort of like that as well. especially if you had like a bad quarter previously. You could see a lot of selling to rebalance. I mean, like if you had a really good quarter, you could see a lot of selling at quarter end. So it depends on your position. So if you have like a bullish spread, you'll probably want to get out of that for a quarter close if we have a good quarter. Or if we had a bad quarter, that kind of thing, you probably want to flip that around. But in general, I'd say like I try to skip those dates, like go like a week past it or a week before it, that kind of thing. There are some people that like to play the volatility, but I think it's you just have less probability of profit if you're factoring in, like, let's say you're trying to play earnings. It's a dangerous game. You could either be really right or really wrong. So,
Or really lucky or really unlucky.
That's right. Yeah, you got it.
Thank you.
Yeah, but that's good. I mean, I'm glad. These are all really good questions. It's something that I like to encourage, just because like other people are learning and other people are trying to get a good grasp of like how all this stuff is interrelated. And when we're in the situation we're in today with the markets, it's a very difficult scenario to try to be contrarian and try to short and do put spreads and stuff like that when you know that you might be going underwater almost instantly when you make the trade. But again, like you could be right long term, but short term it doesn't matter if you're insolvent, right? So it's like you want to. It's like you're trying to be careful, but you're also trying to learn. So, anyways, like the questions are good, so I appreciate it. I probably got time for like one more question, and then I gotta hit the road. Anybody? Yes, I like steak and rum. Okay, all right. Well, I guess we could wrap up today then. Thank you everybody for joining. As always, I appreciate your participation and everything. Is this helpful? Just want to say in general, like, hopefully, this is adding some value for you guys. Trying to change it up a little bit with the service, like, with the weekly webinars. I do want to schedule this workshop thing. It's been a very, very busy week. I don't want to do a hack job on it. So I'm going to, I want to make sure that I get a good outline and stick to the script. All right. Cool. Well, thanks guys. Appreciate it. And I will post this webinar up shortly, and I will see you tomorrow. All right. Thank you.